Okay, welcome back. You're with us here on Bazaar morning Call. Let's just take a quick look at what we have on Market Laser today. What we're talking about is fears around COVID, right? This is something that we put out on Friday as well, 2 days back actually. What's happened is that in China, because of the reopening that we've seen, there is an explosion of cases. Now, on social media, of course, it gets amplified quite a bit. But even mainstream media, etc., as we put out 2 days back, is now reporting that this is a serious wave which China is seeing, and it's very natural that they're seeing it. We had said, when 2 days back we put this out, that it's possible that, governments around the world also start proactively taking steps. It's already happening. Last 2 days here in India, we've seen governments take note of it in a big way. So there have been meetings at very senior ministerial levels which have taken place. The Prime Minister called a meeting. Some of the earlier sort of surveillance measures which were completely dormant because things had gone away, they are being brought back. There were rules which were issued effective the 24th of December for incoming international travelers, etc., etc., etc. So, I mean, at this stage, it's about vigilance. It's about, just staying alert because of any potential new variant which may come out of China. The variant in China which is predominant is an Omicron variant. I think it's called B.7. So that is the big one. There is no reason to believe. I think we had Gagandeep Kang yesterday who told us there's no reason to believe it's going to be something devastating for here in India because we already have a vaccinated population. Of course, on top of that, you also have infection exposure, which gives some amount of immunity as well, which is not the case in China. But the question is this: could this lead to some hesitation in terms of discretionary spends? Right? I mean, going to a movie theater, for example, or flying out. I mean, or maybe checking into a hotel for the weekend. Discretionary items which are not absolutely necessary because of what the government is saying, could that perhaps take some sort of a sentiment hit? It's absolutely difficult to predict what quantum, etc. And we've been speaking with companies at this stage, of course, only Path Labs, but we'll over the next couple of weeks speak with hotel companies, companies like PVR, etc. So I thought, why not put this out? I also looked at charts, right? Two names which are kind of a symbolic of this reopening trade in the market. One, of course, is PVR. It's up on your screen. As you can see, it's sitting on an important trend line. What this shows you is that, the trend line starts on the 19th of May 2020. There are three touch points, actually two touch points in between 2020 and where we are on it now. Actually, as of yesterday, the PVR chart, the daily chart, is broken below the trend line. That is one. So I think it's set in a precarious kind of a way. Stocks have done very well, remember, and incrementally, if there is to be some pullback, etc., keep an eye. The other one is Indian hotels, which is again symbolic of the entire travel tourism sector. This one again, as of yesterday, is back at a rising trend line all the way starting April 22, 2021. And as of yesterday, it's touched that. It broke below it for a brief period, but it's sitting on it. So I think, these are names, and these are just two, but there are others as well. But these are basically symbolic of their respective sectors, travel, tourism, and multiplexes as well. So, keep an eye, keep on the radar as things progress here. Anand, of course, is still with us. Anand, your thoughts on this theme, or this what the government is telling, and of course people will sit up and take notice as they should. Your sense?
Well, as I said earlier, it's very difficult to game COVID, right? It comes out of the blue and you don't know what variant and when it becomes a pandemic again. But as the doctors on your panel yesterday mentioned, there is no particular evidence to show that India per se is under any serious threat. Of course, we have to watch how things evolve. Will that reduce discretionary consumption? I am not sure. Right now, there seems to be a huge pent-up demand. If you see the lines at the airport and the bookings in the hotels, there is no indication that anyone is particularly concerned. I think to the extent that that pent-up demand continues and people in the urban areas think that you want to go out and spend money, nothing much is likely to change. Whether that will translate into stock prices is another thing altogether. I think, for example, the multiplex stocks are not particularly cheap given the context in which we are operating. There are so many movies which have only now started to come out where there is some crowd coming through, and that too not the Indian ones. So, I think multiplexes aside, if you look at hotels and airlines, I think you are likely to continue to see fairly good demand. At a totally macro level, of course, the assumption one is making is that there will be more incremental demand coming from the rural consumers rather than the urban ones, and therefore a mix of stocks may have to change to accommodate that.
Okay, by the way, Avatar is doing extremely well at the box office. So far, it's raked in $500 million worldwide, and India is one of the top markets. It's the top 5 global markets for Avatar. So no surprises that PVR is doing well, and now we're heading into the Christmas weekend as well.
I don't remember, but I read somewhere that it's to break even, it needs to make some $2 billion. It's nuts, right?
So, the movie.
The movie, it needs to make, the break even is $2 billion, then uske baad baat karenge.
Who's going to watch? Who's going to help them break even? Are you guys planning?
Who's going to watch? I heard the movie is painfully long, and
I'm not watching.
I think my attention span has really gone down after COVID.
I plan to go.
It's
one of those. James Cameron pretty much invented, the 3D camera
3D,
techniques.
high tech.
He built he built those cameras.
The earlier
with the first Avatar.
The first Avatar was the highest grossing film of all times, almost $3 billion. So this one has a long way to go.
He's got, from Terminator to Titanic. Avatar 1, and of course now.
Did he go bankrupt as well? A couple of...
No, he's very wealthy. He's very wealthy.
I'm going to Google as we speak.
But personal problems of James Cameron, we'll discuss that on the other side. But let's move on now and in fact talk about the recent COVID resurgence, which is the other big headline in some countries. The pharma and diagnostic space is in focus. A lot of these diagnostic companies have, the stocks have risen. The companies, of course, have indicated to us that the testing has not picked up in a big way just yet. Vishal Manchanda, the pharma analyst at Systematics Group, joins us now. Vishal, hi, good morning. Do you see an outsized amount of testing now for, many of these testing companies? And what do you do with the stocks, whether it's a Metropolis, Dr. Lal's, Thyrocare, Vijaya Diagnostics? Are you bullish here?
So, good morning. So I think testing has not yet picked up, as you said, because we are not seeing any, the intensity of COVID in terms of severity is quite mild. So we are not seeing patients who need hospitalization. So I think COVID is just like any other infection as of now. But there is a sense of urgency that we are seeing at the center. So probably we might see some regulations around testing coming up, especially on the travel front, which would be, so depending on how it spreads among the general population going forward, we'll see diagnostics catching up in the general population. I think it all depends on the severity of the infection. If it is severe, people would go and get it checked.
So is this a play, the diagnostic play, say a Metropolis or Thyrocare, something investors should consider just for the short term as this plays out?
So I think right now, I don't see any signals in terms of diagnostic tests picking up, because so far we have all been kind of unmasked for quite a while, and we have also seen people getting infections, but none of these infections turning severe. So as of now, I don't see any signals pointing to diagnostics picking up. So I think we should refrain from creating a position here in the diagnostic space. So as of now, it's unlikely, it seems, although there is caution at the center in terms of COVID resurgence. But I think it's better to wait and watch.
Okay, wait and watch. Some of these other pharma companies have had a pretty rough ride this year. I mean, Dr. Reddy's, for example, is down almost 12% for the year. But I was noticing in your top buy recommendation, you do have Dr. Reddy's, you like Sun Pharma as well. What are the triggers for growth, and is the risk reward favorable now?
So Revlimid and Dr. Reddy's unfortunately has seen litigation around one of its key drugs in the US, Revlimid. So that's probably creating an overhang. So people are not sure whether this Revlimid opportunity would sustain for about the next 3 to 4 years, which was earlier anticipated. So that's the overhang on the stock. So once we get clarity on whether this litigation, how this litigation would unfold over time, whether generics would prevail or not, only then I think Reddy's would start picking up from here, or else Reddy's would need to get other large approvals in the US. So they obviously have been chasing complex generics, and they've been the first ones to invest in complex generics. And the other trigger for Reddy's is China, getting approvals in China. So both these triggers, if they play out, they'll kind of help Reddy's execute their business beyond Revlimid, and that will create more confidence among investors to chase this as a long-term growth story.
Vishal, what did you make of Ajanta Pharma? Yesterday, the stock closed with a gain of 4.5–5%. This is despite the promoters selling close to about 4.5–5% stake in the company. We know from the details of the block deal that a lot of marquee mutual funds have bought stake. I think Nippon has picked up some stake. ICICI Prudential Mutual Fund has picked up close to 11 lakh shares. And now the promoters will be able to bring down their pledged shares as well in the company. Thoughts on Ajanta Pharma? And do you think the up move can continue?
So Ajanta was quite attractively valued, looking at a very large portion of their business coming from branded formulations. 73% of their sales is coming from branded formulations, which is a structural growth opportunity. So it was trading at a less than 20x consensus EPS FY24. And if you look at their average trading range, this was much below their average trading PE multiple over the last 5 years. So I think the stock is attractively valued, a good opportunity to kind of create a position here.
Right. In pre-opening, the stock is trending higher. Thanks a lot, Vishal, for joining in. That's the Systematics Group with their views on the pharma space and what to expect. The pre-opening rates have settled lower, much lower actually. The Nifty is down about 150 points. It looks like it's going to be an ugly start if you're a bull, that is. What's putting pressure on the market today is the banking space. So IndusInd Bank, HDFC Bank are under pressure. There's Tata Steel, TCS, Bajaj Finserv that's also indicating a red tick this morning. And what could perhaps buck the trend? Once again, it's defensive names, pharma names that are not doing too badly. So there's Sun Pharma, Cipla, Divi's Labs. Generally, there's a rush towards safe haven at times like this. But let's get a quick call in at 9:10. Mitesh, what are you looking at 9:10 this morning?
I think a much lower start, then I'll want to wait for some intraday pullback to go short upon. But for the time being, Adani Ports is a sell call. Keep a stop around 870, look for 830, 825 as the first target area.
All right, fair enough, Mitesh. Stay with us. There's 4 minutes to go for the market open. Momentumizers is what we have up next, and we are focusing on JBM Auto. Surabhi standing by to tell us why. Surabhi, hi, over to you.
Hi, thanks for that. So JBM Auto will be in focus. The current market price is close to 484 rupees. Yesterday, the stock rallied close to 10% in the last hour of trade. In the last 6 months, the stock is up nearly 20%. In the last week, the delivery quantity is 5 times the 5-week average, and the traded quantity is 11 times the 5-week average. Now, JBM Auto is a supplier of key systems and assemblies to the automotive OEM industry. It caters to reputed clients like Ashok Leyland, Bajaj, Auto, Hero and Ford. In its Q2 FY23 results, the revenue was up 37% on a year-on-year basis at 1,029 crores. The EBITDA was up 30% and the PAT was up 43%. Now, things that could work in favor of JBM is there's a strong upcycle of the passenger vehicles for the next 2 years. The encouraging revenue potential from the tooling business, which is a high-margin business, it yields a margin of 25% plus, and also increasing economies of scale in the bus division. All of these could work in favor of JBM Auto.
All right, thanks a lot for that, Surabhi. The other stock that we're looking at this morning is SBI Card. Now, it's in focus after reporting very strong market share gains after record credit card additions in the month of November. So if you look at it, the month of November, SBI Cards added 3.88 lakh credit cards, which compares to 2 lakhs, which is the 12-month average, and 3.4 lakhs in October. So it's a big pickup. And these are record numbers. Not just that, the market share of SBI Card has also gone up about 17 basis points month on month. So now it's almost having 19.5% of the market. Morgan Stanley put out a note where they have an overweight call with quite an aggressive target price of 1100. They say that the USP for SBI Card is, higher market share, and even their spends per card has gone up quite a bit. So that's another stock that we're looking at. But Sonal is with us to talk about Godrej Properties and why she's watching it. Sonal.
Well, the company is in focus because they've announced to the exchanges that they will be developing a residential group housing project in Gurugram, and it will primarily be for the residential apartment along with other things. The total development size is 14.27 acres in terms of the land that they are building it on, and this will have an estimated revenue potential of 3,000 crore rupees. So that's a big amount. This will be company's largest residential projects that they have put up in the city of Gurugram, and Gaurav Pandey, who is the MD and CEO designate after Mohit Malhotra, says this project will allow them to increase market share in this particular geography. Now, alert, Gaurav Pandey will be taking over as Managing Director and Chief Executive Officer with effect from 1st January itself. So his strategy is something we'll be watching out for.
Okay, thanks a lot for that. Well, we have about 12 seconds left for the market to open, and looks like it's going to be a disappointing opening if you're a bull. The Nifty is indicating a cut of 150 points and the Sensex down 600 points. But no surprises considering the global handover was on the weaker side. There you have it, the first tick on the index. It's quite disappointing. So it's a big gash, really. 100 points low on the Nifty, straight off the back, and almost 400 points gone on the Sensex. The advanced decline ratio as well is well in favor of declines at 1:6. And the pockets that are hurting the hardest or getting hit the most is financials. So you have IndusInd Bank that's down almost about 2%. Bajaj Finserv is down 1.5%. Then there's IT, TCS, Wipro, Tech Mahindra are all in the red right now. Metals is also getting hit quite a bit. So Tata Steel is down about 1.5%. You have JSW Steel that's down about 1%. Tata Motors is down almost 2% right now. And some of the other heavyweights, Infosys, L&T, Titan, Hero MotoCorp are all trending in the red right now. After the initial 110-point gap down, the Nifty is now down about 90 odd points. So still stuck with steep losses. What's gaining though is Pharma, Sun Pharma, Cipla, Dr. Reddy's all in the green. ONGC Britannia also holding up a tad bit. Nestle is not bad. So FMCG and Pharma, generally the pockets of, safe haven pockets, so to speak, are doing well. But the mid-cap index actually taking a bigger brunt this morning.
Absolutely. The mid-cap index is down over 1%. The advanced decline ratio has one stock in the green for more than 5 stocks in the red. So there is bigger damage that you are seeing in the broader markets. 2,000 stocks currently in the red. And for the week so far, the mid-caps have underperformed. Week to date, the Nifty mid-cap index is down 3%, while the Sensex and the Nifty are down 1.3%. So there is that big underperformance that you are seeing. All in all, Indian markets are lower for the 4th consecutive day now, and the Nifty, as we speak, is just holding on to that 1800 mark. A quick check on the stocks in the green, very few. It's only a Nectar Life Sciences and Morpin Laboratories, which is coming up on the gainer side, stocks which have some volume, at least in early trade. But other than that, it's a sea of green. A couple of the big losers include that in the banking space, IOB, UCO Bank under pressure, RVNL, there was an order win. Despite that, the stock is under pressure. That slid close to about 2.6%. Bajaj Hindustan is down 5%. Remember, sugar stocks were gaining ground for the last couple of days, but now that tide has reversed. That's under pressure. Adani Power is another big loser today. Zomato has lost 2.7%. These are some of the stocks. Let's pull up Sula. It listed yesterday. It was a pretty dismal debut. The stock ended down close to about 7 to 8 odd percent. But this morning, it's opened up with some strength. A quick word on the stocks which are in the news. The defense stocks are under pressure. So HAL down 1%. On the flip side, BDL, Bharat Dynamics, has gained 2.5%. Thyrocare is higher in trade. Ajanta Pharma sees a little bit of a green. Ingersoll Rand, which has planned a manufacturing plant in Gujarat for an investment of 170 crore, is also higher by 1.7%. Currently down 100 odd points, Prashant, on the Nifty, not giving up that 18,000 mark, but firmly lower for all the key indices.
Absolutely. I mean, so we are below that trend line that from the June lows, which basically comes in at about 18,100. We're about 80 points under it. You also, but it's from the opening level, which was also the low at 17,975 is the low. It's already about 40, 45 points higher. I mean, the index. So this is, I mean, you know, if yesterday is anything to go by, or the previous many sessions, this is Act 1 or in today's session. It's huge. I mean, yesterday, for example, you had a 120-point surge, 250-point sell-off, then a 100-point rebound, and finally you had a 65-point sell-off, right? So these are large intraday moves that we are seeing. But one thing has been clear, chasing a move right out of the gates has been a mistake, because I mean, if it's a large enough move either on the upside or downside, it's reversed. That's been the experience last 6 sessions or so. 18,014 is where we are at. Let me just quickly highlight a few other names. Market breadth is pretty negative, right? I mean, 1,600, 1,700 stocks are lower and 200 stocks are higher. So this was something we highlighted yesterday as well, that yesterday's market breadth was, the poorest we've had in a long time. In a very long time. And today, right out of the gates, it's pretty bad as well. Zomato is down almost 4% at about just under 57. I think we highlighted PSU banks, UCO, I think we highlighted Indian Overseas Bank, we highlighted, these are all lower. Adani Power is starting about 4% down. Stocks at about, 265. Punjab and Sindh Bank is down 5%. The pullback in PSU banks continues. There is Lemon Tree, which is down about 3.75%. 74. There is Garden Reach Shipbuilders. I highlighted that earlier. Cochin, Garden Reach, Mazgaon, they were all down between 7 and 10% yesterday. So there is some follow through there. But this comes on the back of very strong gains we've had earlier. GE Shipping has been an absolute stunner of an outperformer. After years of underperformance, this year has been fantastic. It's down 4% today. There is what else? I mean, Lemon Tree, which is starting about 4% lower. I highlighted, let's put up those two names, right? Which we highlighted on Market Laser. There is PVR and Indian Hotels, one from the sort of multiplex space and the other from the hotel space. PVR starts about 1.25% lower. That is also below the trend line. Indian Hotel starts about 1.5% lower as well, just under 300 odd rupees or so. So that's market opening for you. Anything outsized on the upside? Not very much. Morrison Laboratories maybe. That's coming up with a 7% gain, 8% gain now, and it's the second top traded name across the board. So that is something you may want to highlight. There is Nureka, which is up 8% as well. Nureka at about 567. And only reason I'm highlighting is because it's got volumes right now. And Thyrocare is another one, which, yesterday from the highs, it sold off some 15-16%, high to low. It ended lower sharply, but it's starting 4% higher once again this morning. We were highlighting other defense names. BEL, the oldest defense company, that's up about a third of a percent, beg your pardon, at the word go. So 120 points lower, just about kind of keeping its head above the 18,000 level is what we have on the Nifty. More on specific stocks in a bit, but Punita Kumar Sinha is managing partner and founder at Pacific Paradigm Advisors. Punita, great to have you with us here. Thanks very much. Appreciate your time. The end of the year, we were expecting for quieter markets and no real big change one way or the other, but that's not the way this is turning out. Your sense on what your observations are in the US as well. We seem to have begun perhaps a fresh leg down. Indices were down sharply again last night. Your thoughts?
Well, I think definitely it's a very mixed environment because of inflation, interest rates. The Fed itself, gave basically an unexpected surprise, because I think the markets were really anticipating that the Fed is going to be done, but their commentary actually surprised the market negatively. So even I think so that's really been the main reason for why we've seen this turn after the rally that happened in November. And I think now the focus is going to be on earnings, because the quarterly earnings are going to be released in January, and that is going to be a very important point on which I think markets are going to be pivoting. So for instance, right now we are seeing earnings estimates getting revised down quite sharply over the last 1 month, and the earnings revisions are sharply downwards compared to what they were 3 months ago. So markets are expecting some kind of an earning hit or reduction in earnings. And so January results are going to be very, very important. And I think, of course, the Fed has set the tone that right now they're going to keep being hawkish. But if earnings are strong, that might still offset some of the Fed commentary. I expect the markets will really bottom by the first 4 or 5 months of the year in the calendar year 2023, because I think by then the Fed will be done. Earnings should bottom out. I don't really expect much of a very deep recession. I think the recession is likely to be shallow. I'm frankly not seeing any real signs of a recession in the US.
Okay, that's well, a bit of a breather, right? No real signs of a recession, and you have your sort of feet on the ground, your ear to the ground, and you know what's happening there. So it's great to hear that. But let me just draw our viewers' attention to what's happening in the market now, because the sell-off is exacerbating as we speak. The Nifty has given up on 18,000 quite effortlessly, actually, down 150 points, and it is the banks that are bearing a big brunt. IOB, UCO Bank, all the big gainers are down. Punjab and Sindh Bank, all down anywhere between 5 to 6 odd %. And these are the volume losers this morning. Central Bank of India, Karur Vysya Bank, all down about 4 to 5%. Punita, this was a space that suddenly became the darling of the stock market, right? PSU banks. And very quickly, it's a turn of events here. What do you do?
No, I think basically this year has been about value stocks, and all the value stocks have been the ones that have outperformed. I expect that value is still going to be in favor until markets really bottom out, at which point I think investors will start shifting to growth stocks. But I'm not too concerned about the financials right now because I still see some value there as compared to some of the other sectors of the economy. But there are other sectors of the economy as well that I think are a good place to be in environments like these where there is inflation. So, for instance, infrastructure is a place that I think would keep benefiting. The real estate sector, financials obviously benefit as credit growth in India is strong. So I think right now we still should be focused on maintaining a good exposure to value stocks.
Punita, morning. Rima here. You spoke about how the earnings downgrades have picked up in the United States, particularly in the last 3 months. In India, where is it that earnings estimates have been cut recently? And
in India also, I'm seeing the same trend.
Where?
I'm seeing the same trend.
Where is it that we've seen the sharpest decline in earnings estimates, and which ones are vulnerable going ahead as we enter into the earnings season?
I haven't really focused in on which ones have had sharper declines in earnings estimates. I think there's been broad-based earnings declines, on the estimate side. As I said, I think typically in environments like this, where growth stocks are generally risky, and that's what we've seen. But as I said, in the next 3 to 6 months, one should be building positions in growth stocks and shifting a little bit out of value. But for the moment, you stay put in value stocks. Now, the one interesting thing I wanted to mention, I was looking at this table of emerging markets performance and developed markets. India actually on value scores really poorly. It's one of the worst in terms of value ranks. And in terms of growth, if you look at EPS growth estimates for India for 2023, they're the highest of most emerging markets. Even compared to most developed markets. So I think, and also from, talking to the companies that I'm on the boards of, I'm seeing everybody is really focused on India as a growth part of their portfolio. And so whether it's manufacturing, capital goods, infrastructure, real estate, all of these sectors will benefit from more and more manufacturing, or at least the potential of manufacturing to shift to India. That means capacity will be increased. And so everything related to that will benefit, including the banks, because then there will be credit growth related to all these sectors.
IT, Punita, is this a good time to be buying IT, or would you stay away?
I think the valuation in IT has become reasonable. Of course, I would wait for the earnings growth because we're going to have, second week of Jan is when most of the IT companies start reporting. I think the commentary is obviously going to be not as optimistic as it's been in the past, especially because of what we're seeing in the US as well. But I expect that after the earnings and any reaction to the earnings, one should start looking at maybe getting back into some of these names.
Would you look at large cap or mid cap IT?
At the moment, given the environment, I think large caps are a bit safer.
Okay, safer to stay with large cap IT names. Got that. Since you're not expecting any major recession in the US, I reckon you're not even expecting a large sell-off in the Indian markets. What then do you think the trajectory would be over the next 6 months? Do you think we'll be in a painful or time-wise correction, if not price correction?
Yeah, so first of all, on recession, while most economists are expecting a recession, most people are, of course, saying it'd be a shallow recession. And right now, other than some of the layoffs that we've seen in the US, in the Christmas period, the sales that have happened, retail sales have been very strong. Restaurants are full. Travel, it's hard to get flights. So, it doesn't feel like a recession at the moment. Now, whether a recession will actually come in the first quarter or second quarter, that's at the moment hard to see how things could change so sharply downwards, but they might. But I think it would be shallow. Now, in terms of India, in India, I think the inherent growth story is there. So I don't expect a very deep recession in India. And now, in terms of what happens in the markets over the next 6 months, as I said, earnings are going to play a very important role. So we should, the Fed commentary, I think we know what that is. So that's kind of getting priced into the markets, that it's hawkish. So I think the real focus is going to be on earnings. As I said, I expect in the next 3 to 6 months, markets will bottom. Whether you call that a time correction or a price correction, I don't know, but there may be some more correction. Given definitely there'll be volatility for sure.
All right, we will leave it at that, and Happy New Year to you, your family, your team. Thanks a lot for joining in. Hope you have a great year ahead.
Thank you. And Merry Christmas. We are all wearing red today.
Yes, we are. And we, at the start of the show, we put out a disclaimer saying, you know what, this is not to gauge the mood of the market. It's purely for Christmas cheer. So I hope our viewers got that. Thanks, Puneeta. Always a pleasure speaking to you. And have a great year ahead.
Thank you. Thank you.
Okay, well, let's move on from the markets and talk to some corporates now. Bata is one stock in focus. The stock is down 11% this year. Higher raw material costs, weaker demand has hit the earnings performance. To discuss where Bata stands now and how the second half of FY23 is shaping up, Gunjan Shah, the Managing Director and Chief Executive Officer at Bata India, is joining us on the show. Mr. Shah, good morning and thanks a lot for joining in. I wanted to start by asking you about demand, because there are some trends which indicate that demand is slightly on the weaker side. The rural side of the economy, tier 2, tier 3 cities have not recovered as well as one would have expected. Are you seeing that sluggishness as well? And what is the outlook for the second half of the year?
No, see, there are two parts to the demand the way we see it. But before that, good morning to everyone, to you, Sonia, as well as to the viewers. So there are two parts to the demand the way we see it, right? And there has been, obviously this year, while overall demand has recovered significantly versus pre-COVID, etc., I think the key piece that is the watch out is basically the impact of inflation. We have seen in our category and overall a very high level of inflation, and that does have an impact, especially at the mass end of the categories. And that is something that's a watch out. But the rest of the categories, as far as premium goes, sneakers, casual footwear goes, I think we've been doing and seeing good demand on it.
Gunjan, hi, good morning. Good to have you with us here. Thanks very much. Prashant this side. Could you tell us what percentage of your portfolio is mass? Because you're also, and what percentage is what you describe as premium sneakers, etc.
Right.
And second, on a year-to-date basis, volumes for Bata are, at what level of pre-COVID levels, if you can give us a sense?
Yeah. So mass category, the way I would say it is, pricing below 1,000 would be in the range of about 40%, right? That category is also seen impact during this year for GST, and therefore that has also created some kind of an impact. I'm sure it's going to wane off over a period of time, but that's the situation right now with inflation as well as the taxation change. The rest, premium would be the rest. Out of that, sneakers would be about 20%. So that's how the split of the portfolio would be.
Gunjan, morning. Could you give us an indication of what the volumes are for the mass category?
Okay.
Yeah.
Right. So we saw some volume, sluggishness in the first half of this year when we, bore the maximum brunt of the inflation as well as the price increase that we had to take. But post that, we have seen positive recovery ahead of pre-COVID levels in volumes broadly.
Some more numbers, some more nuance. So say in the month of October, November and half of December, what are the volumes in the mass category and how would it compare with pre-COVID and last year? And if you could give the same for even the premium.
Yeah, so I'll not be able to give you commentary on the recent quarter, etc. But broadly, the commentary is that we are seeing volume-based growth, at least in the quarter that was till September.
Okay, volume-based growth till September. Well, that's not helping. We're not getting any numbers from you. But let me, shift focus to the operational performance because margins have been under pressure. At one point in time, way back, I guess, used to sit on even 30% margins, which was your peak. And now it's come down to less than 20%. As the raw material costs sort of normalize, what can the average margins be in FY24?
Actually, if you look at it, Sonia, our margin profile has been improving every quarter. Yes, there has been an impact on inflation for the last year, as I mentioned earlier, and especially clubbed along with the taxation change that happened in GST for pricing below 1,000 rupees. So that club has had a disproportionate impact. But as I said, we are more than hopeful that this should wane off as time goes by. And that should therefore then basically reflect in the margin recovery continuing going ahead.
Sure. So do you think that you could get back to that sort of 23-25% range? Could it be better than that? What can we hope for? What can your investors hope for?
Our endeavor is towards basically making sure that we get sustainable and profitable growth. And I don't see a reason why in the medium term we should not be making sure that we live up to that.
Gunjan, just a point on sneakers, right? Sneakers are all the rage. I mean, we hear it from other companies we speak with as well. It's for you. It is now. You said 60% is premium and 20% of that is sneakers. So 12% of your total sales is sneakers.
No, 20%. So 20-40.
Oh, okay. 20% is sneakers. Got that.
Yeah.
And these are in all brands. I mean, Power, Hush Puppies.
Primarily, they are Power and North Star.
Okay.
Right? That is what drives the sneakers. But we do have basically sneaker offerings across other brands also.
Okay.
Which is different user locations. That club is about 20%.
Okay. And what is where does this price range start for you? What is it growing at? I believe this is the fastest growing segment, not just for you, but in the industry. So what are your plans here?
So there has been a lot of progress. We have also invested a lot behind this category. The price range, Prashant, ranges from around 1,000 rupees to almost 5,000 plus, right? So that's a pretty wide band. We can afford to do that because we've got multiple brands that straddle various price points and usage occasions, right? The other thing that we have done significantly is one is expand the range of offering to consumers. We have also opened almost in the last 18 months, almost 250 sneaker studio walls across all stores of ours. So, and that's expanding at a very fast clip every quarter. And we expect that to continue driving. Sneakers has been driving our overall growth recovery. So it's been significantly ahead. While the overall growths are ahead of pre-COVID levels, we see sneakers even further ahead and therefore driving growths within that.
What is the rest of the portfolio growing? What do you see the rest of the portfolio growing at, and what do you say? Where do you see sneaker growth?
So for the quarter 3, that was September, we saw basically overall growths around 15%. Sneakers was around 25%. So it was significantly ahead, driving the overall growths.
You had plans.
Prashant is asking all these questions, you know, from a personal standpoint. having two kids, I'm sure he's.
I have a very basic question. How do you define a sneaker? What is a sneaker?
You know, the sneaker studio concept.
I don't think we should ask
This
that.
sneaker studio concept is really interesting. There are 900 different styles.
Yeah.
And 9 brands, and there's this huge wall. I'm sure you've seen it. Many people are doing it these days.
Yeah.
It's confusing, to say
We
the
should
least.
get our shoe expert, Mangalam, in there.
And probably, yeah, no. So, Mr. Shah, just wanted to understand, you had plans to add 500 new stores in the next 3 years. How many this year, how many in FY24, and how many in FY25? And, yeah.
So we are well on track for that plan, and you can calculate for yourself, but we are well on track, and most probably we should be ahead of plan on that front. What I had also mentioned is that we want to make sure that it is a prudent ratio between the franchise model and the company-owned model. So we will have broadly about 80% of net new store openings coming from the franchise model. So that plan remains on track.
Do you think you will have to perhaps spend more on advertising, considering there's so much competition these days? And advertising as a percentage of sales, how much would that go up by in FY24?
So, Sonia, this year, 22, my best estimate would be that we would cross peak levels of advertising that we have done in the past, which itself was a significant ramp up over last almost 5-6 years. We believe that advertising and brand investment works in our favor, so we will continue that. While quarter on quarter, there might be some lumpiness, but broadly over medium term, we will continue inching that forward. We are currently at about 3% of sales.
So how is the market share shifting and trending in the mass market? Because many of your competitors as well have seen weakness in the quarter gone by. Could you give us an indication of the market share shifts? And is Bata gaining, losing? If yes, to whom?
Yeah. So I think overall, I would comment on it. Right. Overall, from whatever we get to hear from Euromonitor and other sources, is that COVID, we did see there was a significant impact that we saw in terms of shares. But the way we are seeing this year going, we are more than confident that all of that is coming back now, the way the first 3 quarters have gone.
So you will recoup the market share loss that you had during COVID?
Yeah, absolutely.
So your market share?
There was a disproportionate impact that came on to retailers and especially, organized retailers like us, etc.
Okay. I guess, this also assumes importance because of the kind of hectic competition we're seeing, right? Whether it's from some of your peers like Campus, the new collection, it just begs asking whether you could see perhaps more operational pressure and you may have to sort of come out with cheaper price points just to deal with this kind of competition?
No, see, Sonia, the market in India has been intensely competitive for decades, right? It is just that a few players have got listed, but it is the largest player, which is us, is less than 5% of the market. So it is a significantly fragmented market with an intense competition. And competition is always good. Consumer benefits and keeps companies like us agile, right? And therefore making sure that we are in trend with what the consumer is wanting, and therefore the consumer gets the best value for proposition.
All right.
So I don't see that as a threat. In fact, I think that's something that makes sure that we are all moving with the times and therefore offering the best value to consumers.
Okay, got that. It's a pleasure. Thank you very much for that chat, for that conversation. Really appreciate it. So Bata,
thank you,
the most trustworthy, oldest, well-known footwear brand in the country by far, and of course the largest as well. 1625 on Bata. The stock's down about 1/3%. Premiumization is the name of the game, or should I call it sneakerization, which I think is what the management alluded to as well.
Sneakerheads, right? That's what they call themselves.
It's a culture thing, right? Yeah. Sneakers. This trend for dirty sneakers, right? I don't know. I'm learning new things with.
You should know. You have children of that age.
I do, but
he can't keep begging you to buy Air Jordans and whatnot.
There's a culture gap, You try and bridge that every day. But 100 points lower on the Nifty, 18,022 is what we have, which means that the market has actually bounced a little bit from the lows. The low today is 17,965. And we're about 50-60 points off the low point of the day. So this is, a decent bounce already, which is starting to come through. Nifty futures premium has expanded a bit, 74 point premium on the futures at 18,099. We'll take a quick break here. We have the management of Narayana, the hospital chain, join us next. Stay tuned for that conversation coming up.